my analysis from last week, my focus for last week was on pound dollar again. So for the last few weeks, I have just been putting a lot of focus on pound dollar. We can see that the trend continued to the upside, although over the last few trading days, we have seen some consolidation as price has ranged within this area, as you can see. So 1, 2, 3, 4, 6, 7, the last 7 trading days, price has kind of ranged within this area. But last week, the trades that I took 3 trades on pound dollar, where I was just waiting for these pullbacks against the trend, and I was just entering off support. So I can show you, if I identify these levels. So you've got this resistance level, which then later on turned to support. Identify that area as a zone. And then we've also got this key level here. If I drop the time frame, it's a less significant support level. But you can see that we have actually held support a few times here where price has bounced. So these were the levels I was looking to go long off. And as you can see, as price pulled back against the overall trend, we started to get some rejection here. So I went long here and exited here. I also went long here and then exited near the top. And then I went long again on Friday and exited near the top there as well. So one thing to notice is we haven't actually made a higher high for the last few trading days. As I said, I'm keeping an eye on that consolidation zone. But overall for next week, I'm still looking to go long on pound dollar. So I'm just going to keep an eye on the fundamentals. Tomorrow we've got a manufacturing PMI out for the UK forecasted to show economic expansion. So I'm just going to see how the actual data compares with the consensus. And overall just continue to go long. So moving forward with Brexit, that's obviously had a massive impact on the pound rising, as there's more certainty in the markets with what's going on. Although the UK is dealing with many issues due to Brexit, at least we know what's kind of going on regarding deal or no deal. So since September 2020, we started to see the pound appreciate in value, and especially from March last year when the coronavirus hit the markets. So lockdown started to happen and it really hit the markets. We have seen the pound appreciate against the dollar since then. But looking more in depth at intraday moves, looking at this current movement to the upside, yeah, I'm going to be still looking to go long on pound dollar, just dropping the time frame to the 1 hour and 15 minute, identifying my execution time frame based on the current market structure, and I also use a few indicators which I'll be teaching you on my mentorship program. So just applying that technical strategy, keeping up to date with the fundamentals, and continuing to go long on this pair. Now, US dollar Japanese yen is something I was looking at last week. Although what I've started to see in the last 3 trading days is, although we've had this strong downtrend for a long period of time, the last 3 trading days we've seen 3 strong bullish days for the dollar, which has actually broke this downtrend structure. So we've seen some positive data come out for the US, which indicates economic expansion for America, the United States. So I'm looking to go long on US dollar yen based on this. We're seeing less demand for Japanese bonds, although there's a lot of uncertainty in the markets with new COVID variants, shortages of vaccines, and lockdowns continuing to happen. Like I said last week, we're still starting to see a light at the end of the tunnel with vaccinations taking place globally. In comparison to last year, the market is still seeing more positivity as last year there was the pandemic, there was no vaccine being rolled out yet. We did have the US election. We also had the Brexit. So all of that affected the market quite heavily. That now we are starting to see more of a risk on sentiment in comparison to last year. So last year really driven the price of certain currencies down, and now we're just starting to see those currencies appreciate as there is more of a risk on sentiment. So safe haven currencies like the US dollar, the Swiss franc, the Japanese yen. Reason being for them being a safe haven is because of their bonds. So low risk bonds. There's less demand for them based on that, based on the risk on sentiment in the markets. So euro US dollar, now on the daily time frame we can see that overall the market structure is up, but based on my technical strategy, which does actually filter out certain trades, I'd actually be looking to go long on short on this. So obviously you can see in the last few trading days we have had some bulls come in this market, as there's been a lot of vaccine shortages with Europe, so there's a lot of uncertainty there. There's been mixed data coming out of different European countries based on their current economies. There's positive news for the US with Biden coming in the office, and we've also got a positive forecast for manufacturing PMI for the US tomorrow. So especially with the vaccine shortages, I'm looking to actually go short on this pair. So dropping the time frame, I'll be looking to actually, I'm looking at this resistance level and also some of these levels here, and a few of my tools that I use on my technical strategy, which really help me identify these levels much better, and a support level around here. So we're kind of seeing this range in the last few trading days. So I'm looking to go short off strong resistance and hoping to see this trend structure break. So if it does break, we can start to see the trend line break, bullish dollar against the euro, and we can start looking to see an actual downtrend take place on the daily time frame. Also keeping a close eye on GameStop stock. So my main focus is obviously currencies, indices and commodities. But with everything going on with Wall Street and the Reddit forums, I've actually been taking a look at GameStop stock to see if I can profit off the moves. Slightly uncertain, so if I do end up placing a position on GameStop, it will be a very small percentage of my portfolio. So what I'm expecting to see is over the next week or two, my analysis is predicting that there's going to be some gains towards GameStop stock, depending on what gets pushed towards brokers, whether they actually continue to restrict people to buy some of the stock. But my analysis is I'm looking to see some gains within their stock prices, and then eventually I'm looking to see them collapse. So kind of, if I do place a trade on GameStop stock, it'll be a very, very, very small percentage of my portfolio. I'll be going long, and then as I start to see some fundamentals showing that the bullish move is no longer valid, I'll probably just cash in profits and reinvest half of those profits short. But my main focus will be pound dollar, US dollar, yen, and euro US dollar. Mostly pound dollar due to the fact that it has been fitting this uptrend structure for a long time, and it's been quite simple. I've just been identifying market structure, identifying my execution time frame and support levels, waiting for the pullback against the trend, going long, and managing my risk. So I'll be teaching you all my technical how to use my technical indicators, how to apply my technical strategy, how to read the fundamentals within the market, how to be very strict with risk management and reactive risk management, and to also hedge your portfolio when you are placing these trades. Because at the end of the day, the analysis on where price is going to go doesn't necessarily mean you're going to be a profitable trader, due to the fact that if you're not managing your risk and being precise with reactive risk management, it can essentially turn you from a profitable trader to a trader that experiences catastrophic losses all the time. So these are things I'll be obviously teaching you on my mentorship program. So just subscribe, give a thumbs up, and head over to traderbook.co.uk, take a look at my mentorship program, and then I can teach you more on how to become a profitable trader there.